In about 45 minutes, Wall Street will open. The Dow is set to lose hundreds of points and seeing a loss of over 3,000 points this week. So we have a special guest with us this morning. We have Michael Carlin from Henry Horne Wealth Management. So we have not seen this kind of, I don't even know, what do you want to call it? People are freaking out.
Let's call it a market correction of 10% or more. And this is the fastest we've ever had a 10% correction to this magnitude ever. Ever. Which is what's causing the panic and the alarm. So, you know, we manage over $500 million. We're one of the largest independents in the state. And this week, we've seen more calls and email activity than we've seen in a long time. So people are very concerned.
So what are you telling people? I got an email yesterday from my bank that was saying that they were having a conference call. Right. What are you telling these folks that are calling?
So, you know, those that follow us on Manage the Funds on social media, those clients that we have, we've been preparing for this for some time. So it's when the market's high, you want to take the profits, you want to be more conservative. But right now, markets like this, what you need to be aware of, you need to be cognizant of, is the fact that these things don't last forever. If you look, you know, we've had 26 corrections of 10% or more since World War II. They're usually over in 4 months. Where it gets a little bit dicier is if this does indeed bring us into a recession. Those kinds of corrections of 20% or more can last about 4 months. And I think that the real cause for alarm is people are remembering back to 2008.
I was just going to say, how would this recession would it be similar to the recession that we saw in 2008?
Well, thankfully we're not in a recession yet. Yeah. Thankfully the economy still is poised to grow for 2020. But if this does end up indeed being a recession, will it be like it was in 2008? The answer is no. In 2008, we had a recession on top of a financial crisis where banks weren't well capitalized and it just caused a lot of alarm and panic with financial assets. Banks are well capitalized this time around, so that's not going to be the same kind of issue. So this is the kind of thing that hopefully will be short-term, short-baked, where you have a loss of demand, you have a loss of economic activity, but the market, will take time, react, and then rebound.
We were talking about just even tourism here in our state. I mean, it's $24 billion. I mean, how do you see this impacting even businesses locally? Because they're talking about folks not traveling. Right. We're a big tourism state.
So there's two different kinds of businesses. There's services and there's more of the industrial manufacturing. Industrial manufacturing, which we don't do a lot here, that may slow down, but then it will have to rebuild and build up because you have to rebuild that inventory that you lost. That's different. We're a service-based economy, particularly here in Arizona. Think of it like Starbucks. If you go to Starbucks a couple times a week, 12 times a month, and you take a month off because of the whole coronavirus fear, are you going to go 12 times more next month? Right. On top of what you were going to go? No. So that activity is gone. So that's the real concern. There are certain businesses that are service-based that are going to struggle. And again, hopefully they've done the preparing that they need to do to be solid throughout. And when things do rebound, they'll hopefully rebound as well. But again, there's going to be a lot of lost activity.
A lot of lost activity. I know folks are very concerned about this, and we've made this very easy for you. Just kind of track everything. We have all of this stuff on our website at abc15.com. All of the information is right there at your fingertips, Kaylee.